Welcome to today's market report. European stock markets posted strong gains on Thursday, helped by France launching a new stimulus plan that includes a big lightening of the tax burden for its corporate sector. DAX in Germany traded 1.5% higher, CAC 40 rose 1.6%. FTSE index was up 0.8%. The French government announced that on Thursday it plans to inject €100 billion of stimulus over 2 years to soften the economic impact of the coronavirus crisis. The plan offers up, in particular, €35 billion for making the Eurozone's second biggest economy more competitive, $30 billion for more environmentally friendly energy technologies, and $25 billion for supporting jobs, Reuters reported ahead of the official presentation late on Thursday. Today, investors will also be paying close attention to the release of services PMI data for Europe later today to see if there has been a pickup in business activity in hard-hit sectors of the service economy. Early news from Spain wasn't encouraging, with the services sector there falling into contraction in August as attempts to host the vital summer tourist season led to a surge in coronavirus cases and renewed local lockdowns. The PMI fell to 47.7 from 51.9 in July. Early on Thursday, China's service sector activity grew for a fourth straight month in August, with the Caixin Services PMI index staying above the 50 mark even while dropping to 54 from 54.1 in July. Companies surveyed hired more people for the first time since January. The news was less good in Japan, with the third largest economy in the world reporting an August services PMI of 45, below July's 45.4. In corporate news, Capgemini stock rose 2.3% after the French consulting and IT services provider said it expected double-digit revenue growth in 2020, driven by a gradual second-half recovery. Staying in France, Iliad gained 0.6% after the telecommunications company reported rising first-half net profit and revenue despite taking a hit from the coronavirus pandemic. Drinks companies Remy Cointreau and Campari both hit their highest level in a year. Oil prices weakened on Thursday, continuing yesterday's sharp losses amid concerns about the demand for fuel, given a patchy U.S. economic recovery. U.S. crude future traded 0.7% lower at $41.23 a barrel. Brent fell 1% to $43.99 a barrel. Both benchmark contracts saw falls of more than 2% yesterday, with WTI sliding to its lowest close in nearly 4 weeks and Brent at its lowest since 21st of August. Gold futures fell 0.2% to $1,941.35 per ounce. On the FX front, GBP USD drops to 133.28, down 0.17% on a day, while heading into London opening today. In doing so, the cable extends the previous day's losses, piled mainly due to the downside comments from the BOE members, Brexit pessimism, and the broad US dollar recovery. The pair traders currently await the final reading of the UK services PMI and initial estimations of US ISM services PMI, together with the second appearance of the BOE boss. Yesterday, the EU's chief Brexit negotiator Michel Barnier showed readiness to ease fisheries demand after saying that the UK hasn't engaged in the key Brexit conditions. On the other hand, a lobby group from Ireland wants Brexit preparations mocked in November month budget. Although BOE Governor Andrew Bailey said that inflation expectations have been pretty stable, other board members like Deputy Governor Dave Ramsden and others failed to keep up the optimism while showing readiness to ease if needed. Eurodollar extends the corrective downside to sub-118 levels. The selling bias remains unchanged around the single currency in the second half of the week. The dollar index was up 0.2% at 93.058, moving around 1% above the 28-month low. This is today's market news. Thanks for listening. We'll see you next time.